Thanks for tuning in the video blog today. Today we're going to talk to you about the difference between being in the reaction business versus the prediction business. Stick around, we'll be right back. So I had mentioned on one of my videos or podcasts that I was not in the prediction business, but rather I was in the reaction business, and had a client email me saying, Jeff, what do you mean by that? Well, here's what I mean. Most people think that their advisor are, out to predict the next Google or the next Microsoft, the next Apple. That's not what we do. My crystal ball gets fuzzy right about 8:30 when the market opens. So if anyone's telling you that they're going to predict what's going, what the next hot thing is, run from that person, because it's not going to happen. You can have an outlook. I have an outlook. I have an outlook for 2021, and I've stated this before. My outlook for 2021 is that it's going to be a pretty good year economically, and it's going to be a pretty good year in the stock market. I have my reasons why. You have the Fed committed to lower interest rates. You have stimulus out the wazoo coming in. The M2, which is the spendable dollars, is growing at a rate we have not ever seen before, about 25%. Normally grows about 6% annually. So these are, there's other reasons. I think you're going to have record profits. And record corporate profits, et cetera. So taxes aren't going to go up this year, in my opinion. It'd be a hard sell to raise taxes coming out of a pandemic and a recession. So there's a lot of reasons that I have my outlook for 2021. It's not really a prediction. It's just an outlook. Now, if something happens, if there's like a new strain of the virus that comes out, we don't have a vaccine for that. They start shutting down economies. That outlook changes drastically. So it is just an outlook. It's an opinion. It's just kind of what I think. But you have to be careful about making a prediction and investing in that prediction. I want to give you a perfect example of this. Take a look at this chart. So what you're looking at is the growth of assets into bond ETFs and in bond mutual funds. The yellow bar is bond mutual funds, and the blue bar is bond ETFs. So back in 2008, they talked about the great rotation out of bonds. I used to talk about this all the time. I used to talk about there's going to be this huge rotation out of bonds and into stocks. Why? Because the yields in bonds had dropped so low that it wasn't worth investing in them anymore. And I wouldn't say it wasn't worth, but investors thought that they could get a better return from the stock market rather than bonds. So there's going to be this great rotation out of bond mutual funds and bond ETFs and into equity mutual funds, equity ETFs, the equity markets in general. Well, if you look at this chart, you can obviously see that never happened, because total assets in bond ETFs rose from 57.2 billion in 08 to 1.053 trillion by the end of 20. If you look at the bond mutual funds, they went from 1.69 trillion to 5.214 trillion. So this is even after extended periods of low rates. This great rotation that was being predicted never happened. So that's why I say, all I can do is react to what is actually happening in the market. Cannot predict what's going to happen. So if the market goes down, if the market starts to get, in a bad situation, or we start seeing red flags economically that is signaling recession, in our opinion, then we take action. But we can't predict those things until we can't predict them at all. So we wait for them to happen. And that's why I say I am in the reaction business and not the prediction business, because we're taking action as soon as we see what is actually happening in the market. Again, if you see somebody's telling you they're going to predict what's going to happen in the market, the next hot stock, the next this, the next that, run away from them. So thanks for tuning in the video blog today. Remember, if you got any concerns, questions, or comments, reach out, give us a call, send us an email. Make it a great day.